Let's talk about the markets in 3 minutes and take that market conversation a little further. We're now joined from the Markets Live blog by Ven Ram. Thanks very much, Ven, for joining us. So we just heard from Yusuf there, where we are seeing market reaction, of course, oil and gold to some degree reacting. But other assets, notably the dollar, not really reacting. Not a lot of sort of haven trade into the dollar right now. Does this seem to make sense to you, given what we're seeing in the region?
That oil, gold and the dollar are presenting, Anna. I think oil is right here and the dollar isn't quite pricing the geopolitical risks, nor is the dollar pricing the risk that the Fed might not cut rates in March. The escalation in tensions doesn't bode well, obviously, for the global inflationary picture because of what it means for possible disruptions to global supply chains. We have seen oil prices tick higher on the back of the news. I don't expect Brent crude to go back up to $100 a barrel, but there is a potential to reclaim levels of around $85 a barrel. What that is going to do is to keep those global inflationary pressures on the front burner.
Yes, and that's interesting. And that takes us into thinking about what else is driving the dollar. And, of course, Fed expectations, March rate cut expectations still on the table, despite some pushback from the likes of Loretta Mester. You say that the Treasury market pricing around a March rate cut is untenable. What breaks here then, Ven?
I think the markets are behaving a bit like the musicians on board the Titanic by ignoring what is happening in reality, and instead they're playing a score that they think ought to be playing out there. What did the inflation report really tell us yesterday? That headline inflation is going in a direction that is different than what the Fed wants, and that core inflation is still within a touch of 4%. Yet, if you look at market pricing, traders are still thinking that the base case is that the Fed will cut rates in March and assigning a tail risk that they won't cut them. In reality, I think it should be the other way around. Is the Fed, which is really fixated on its 2% target, going to say, well, you know what, we can ignore core inflation at 4% and cut rates in March? That's the dream that the markets are dreaming, but it's about time that they woke up.
OK, so the dollar is focused on that Fed pricing. You say the Fed pricing is not what it should be. But you've also done some analysis around the euro and suggest that actually the euro is very focused on Fed pricing and not so much on things that usually drive FX fundamentals. What do you see for the single currency?
Rosy prospects, especially in the second half of the year, not so much in the first quarter, because I think that the impetus for the Fed to cut rates is simply absent, and the euro is getting its inspiration from the dollar side of the equation, and therefore it's not going to go anywhere higher just yet.
Ven, thank you so much. Thanks for joining us. Ven Ram from the Markets Live blog. Remember, you can get up-to-date analysis and insight from Ven and the rest of the Markets Live team. MLIV Go is the function to use on the Bloomberg terminal.